It looks like there's even more evidence that the stock market will continue its rally today and that the Federal Reserve is ultimately done with their interest rate hikes this cycle. Not only was the CPI inflation reading great yesterday, the PPI inflation, which is producer price index inflation numbers for October, just came out. And on a month-over-month basis, it came out at negative 0.5% compared to the 0.1% economists estimated. And then core PPI, which is PPI minus volatile food and energy, came in at 0% compared to the 0.3% month-over-month economists estimated. And then year-over-year came out at 1.3% compared to the 1.9% economists estimated. And then lastly, for the core PPI year-over-year, that came in at 2.4% compared to the 2.7% economists estimated. This is all progress for the Federal Reserve's fight against inflation, and this should likely propel the market even higher in the coming days. And then we also got retail sales. Retail sales came in at negative 0.1% month over month, which is good news, and is the first monthly drop since March. This is more evidence that the consumer is a little bit weaker, and that's what the Federal Reserve ultimately wants to see. They want to see a slowing economy in their fight against inflation. And then lastly, we got the House passing a temporary funding bill. It won't include aid for Ukraine or Israel, or the border. But this is a necessary bill in order to keep the government open. And the market actually took that in stride. It had a lot of Democrat support to keep it through and pass. Now it has to go through the Senate and then ultimately to President Biden's desk for signature. But that's another bit of good news that the government might be semi-functional. Although a more longer-lasting bill that includes the aid to Ukraine, Israel, and border security, as well as other spending cuts, will take a little bit longer to reach. The fact that we reached a short-term solution before the deadline is important. And as I said, it has to still pass the Senate and be signed by President Biden, but that's good news. And then there's some more positive market things I've been seeing. First, we're starting to see more breadth in the market yesterday. There's a lot more stocks that advanced compared to declining, and that's usually means a lot of money on the sidelines is trying to move into the market. And then we're also seeing a lot of strength in the small and micro cap stocks. Because they were partially beaten down so much since the end of July, there's a lot of room for them to recover into year end. And I think they have a lot more room to go. And I personally I got into the small and micro caps really since like August and July, considering they were so undervalued. The equal weighted S&P 500 is pretty undervalued too, because the market weighted S&P 500, which is being really propelled by the Magnificent Seven stocks, that's really driving the S&P 500. But the equal weighted S&P 500 and small and micro cap stocks, I think, has a lot more room to run into year end. But overall, these positive reports in CPI inflation, PPI inflation, and retail sales is ultimately good for the economy and markets. It shows that the economy is still growing while we're seeing lower rates of inflation. And we also saw, lastly, we saw one bit of good news from the UK. Their inflation reading came out less than expected at 4.6% compared to about 6% year over year from the prior month. And then the fact that that's also lower than expected shows that central banks around the world really might be done with their interest rate hikes, which is great for the market.